Hi, and welcome back to smallcaps.com.au. Reid here, guest host, and today we have a unique e-commerce and digital marketing company, RooLife Group, RLG on the ASX. Now, RooLife is new to our audience. It's their maiden appearance, and they specialize in market entry e-commerce via a marketplace with international distribution. I'm joined by Bryan Carr, who's the CEO. Bryan, thanks for joining and welcome to the network.
Thank you, Blake. Nice to be speaking with you and your audience.
So interested to hear what you have to say and what's going on with RooLife. I guess just to get us started, for those who might not be familiar, can you start by giving us a quick overview of RooLife and what you do and maybe explain the business model?
Yeah, sure. I mean, we're a data-driven e-commerce and sales channel management company. So that means what we're doing is we're focused on identifying and servicing demand in high growth markets for high margin products and rapidly putting them into market. So what we do is that we leverage market sales and demand data. We utilize our supply networks and multi-channel sales infrastructure, and we're focused in food, beverage, health and wellness and renewables. We're delivering those into real high growth markets such as China and India. Importantly for us is that we're demonstrating that this model is working as we've planned.
Fantastic. Now, Bryan, you mentioned there about being data-driven as an e-commerce company. What does that mean in practice, and how does that differentiate you from other traditional retail models?
Yeah, what it means is that we start with demand signals. We don't start with a warehouse full of stock and then go, okay, how do we find buyers for the product? So our model is to start with data insights, then procurement, then sales. So we use market data, partner orders to identify what's selling, which categories, which price points, and through which channels. So then we create our own branded product, or we source it from trusted manufacturers, and we plug it straight into our sales infrastructure in those high growth markets. You know, traditionally retail usually starts with a product and they spend heavily on store placement, inventory, marketing, looking for ways to push it out to consumers. We're the opposite. We're lean, asset light, and we don't rely on having our own warehouses or bricks and mortar establishments. We lean on where the data tells us where the real demand and the margin is. And that lets us move quickly and scale multiple verticals without having to carry a big cost base.
Yeah, fantastic. It makes so much sense, Bryan, to keep a lean business. You don't have a lot of operational expenditure, which lets you target and be deliberate with the data that you've collected. So, no, a very, very interesting way of going about it. Now, I wanted to ask around your international distribution. You've got China, India. Do you have a thought process around why you've started to focus in these markets? And how is that accompanying your growth strategy as a business?
Yeah, so, we've been very deliberate in terms of our selection. So we look for those large, fast-growing, rapidly evolving markets where our model can be applied and give us the edge. China, it's one of the world's most advanced e-commerce ecosystems, a massive consumer market. And, we look at categories like coffee. Coffee consumption is growing up, greater than 20% in China. The rest of the world, it's a tick under 2%. So that's how we've selected the market and the product. Then we also look at health and wellness. So everyone globally has such a great awareness now and wants to be healthier. It's similar in China, right? So we've got an established footprint, we've got partners, we've got contracts. These are central to our strategy. So then you look at India, another high growth market. It's very much following a similar trajectory to, with the China of 10 or 15 years ago. In fact, today and this week, we're showcasing a range of new Australian products into India. And then look at UK. So we've utilized our capability, our reach to products and analysing the data to understand what's in demand in the UK. We very quickly source, supply and sell into that UK market. And then Australia, it's our home base. I mean, it's where we're listed and it's where we leverage the brand value and the high regard for Australia and Australian products globally. So all things Australian are considered as high quality and safe, especially in the food and health and wellness space. And that's really our forte and our focus. So together, it's a combination of these markets. They give us scale, they give us diversification and a clear runway for growth. And we've got one common engine sitting behind this and driving the sales outcomes.
Of your brand. You recently signed a $64 million coffee supply agreement and launched RLG Coffee just a few months ago. November numbers I read exceeded $1 million in sales. which seems pretty impressive. But are you happy with that? Was that the result you're looking for? And what can we expect from this coffee brand in the future?
Yeah, no, we're certainly happy with them, but it's just the start. It shows that our model's working as intended. $1 million in monthly sales so soon after launch. It's a great early milestone, but as we said, it's just the starting point. It's not the peak. We're ready to speed up the scale from here. And that comes really from the three things that I've mentioned already. It's about the data intelligence, it's about the partners, it's our focus. So having soft launched that RLG Coffee late August, from day one, we've been very much focused on the consumer data. That shapes the product range, the price points, our positioning, our marketing message. I mean, we haven't been guessing or imposing what we think Chinese consumers want. We are reading the signals. We partner with coffee experts, and we're targeting online platforms, like JD, Tmall, Douyin, and our offline partners to see what is in demand, and we service that demand. Having very strong local partners from roasting into packaging through to the online messaging and using live streaming and key opinion leaders, that's let us scale the volume really quickly. And once again, without carrying that heavy fixed cost base, but we've got plenty more growth to come from this sector alone.
Yeah, absolutely. Yeah, I think it just goes to show again your advantage of using data to create a new product and have a really good idea around what to expect, which definitely can help accelerate new products to market, and make you pick the right ones. Generally with consumer products, a lot of them fail until you find the right one. But if you've got some data behind it, I'm sure your success rate can be well more increasing. In your ability to locally and internationally as well. I wanted to ask around health and wellness as well, Bryan. You mentioned that earlier. Can you talk around some of the products you've got available at the moment, or how you're going about that with the long-term vision at RooLife?
Yeah. So what we're doing is, once again, we're servicing the identified demand from channel partners. So we are not trying to take a product to market and then pitch it. We're saying, what types of products are you seeing in demand? What do you require? We look to source those both from established brand names, but then also look to take our own branded products into those sales channels. And that's the approach that we've taken.
Absolutely. Now, just switching tune a little bit, I've noticed that you've diversified and expanded into renewable energy and social commerce as well. A bit of a loaded question, but can you share more around both of those initiatives and why they're important for RooLife?
Yeah, well, renewable energy products fit our model. Once again, we look for high demand, high growth opportunities and high growth markets that we operate in. So, we don't aim to start with that warehouse full of the stock. We start with those demand signals. We then source it, we market it, and we supply using our heritage in market entry and digital marketing and driving sales. So the social commerce and marketing and approach that we've utilized in China and the UK applies the same. So data insights, procurement, sales. So, both of these initiatives matter because they're servicing already identified demand where there's strong growth. It diversifies our revenue. We target those fast growing segments, and we leverage the same technology that underlies this. So it's the data and our partner base. And it means we scale without reinventing the business each time. We are very, very selective about the products we pick and to take into market, but we apply the same principles.
Yeah, fantastic. Now, let's talk balance sheet. You recently completed a $2 million capital raise. How does that strengthen your balance sheet and your cash flow at RooLife? And what are the plans to grow using that capital?
Yeah, it was very much about putting fuel in the tank at the right time. I mean, those funds are being deployed very specifically to provide working capital to support the RLG Coffee production and sales, obviously gearing up as fast as we are. That is a key element. But then continuing to develop and market our own brands, including the coffee, and then across a more broader health and wellness range. In parallel with that, we've also streamlined our cost base. We've divested non-core activities. So what that means is that more of each dollar goes directly into product, inventory, and the campaigns to drive revenue and margin for the company.
Yep, absolutely. Makes a lot of sense. Now, RooLife, for investors over the next 12 months, are there any big catalysts, anything to look out for, any milestones to watch as you continue to grow the business?
Yeah, I mean, there's probably four main business milestones that I'd highlight. I mean, first, continuing to scale in the coffee vertical itself. I mean, growing monthly run rate sales, expanding our range of products, deepening the penetration both online and offline. And as the volumes build, obviously we'd expect to unlock better sourcing, logistics efficiencies. And these should flow through to margins. So then secondly, we'd say, look at the product and format innovation. We see clear opportunities, even broadening just the coffee range, snack pairings, tailored offerings. We have different flavor profiles for the Chinese consumer market than that we would typically see here in Australia, and then reaching into other regions. So each successful new product extends the brand and increases our customer lifetime value. Thirdly, I'd say, look, geographic and channel expansion within China, particularly taking it into next tier level cities and additional offline formats, so we can take, our own branded quality coffee into new markets within China. So each new city, new province is a new market opportunity. And then we'd probably say finally that, growing the RLG brand strategy. So this is the same data, the same infrastructure and partner networks that we're using for coffee can support our other own brands in adjacent consumer categories. So we're going to build that portfolio, and investors should see a shift in RLG's mix towards higher margin, scalable, proprietary brands that are underpinned by a proven, repeatable model. And coffee is just the first example of that. Importantly, it shows that we're executing our plan, and you should see that the businesses are larger, more diversified with higher revenues this time next year.
Fantastic. Yeah, there's nothing I like to see more than businesses executing on their strategy with success. So Bryan, that's been great. Thanks so much for sharing your insights. RooLife seems like they're building a strong presence in some of the world's fast-growing markets. Do you have any final message for current investors, new investors as you're heading to the new year?
Probably just to round off, as you've mentioned there, we said, look, we're a very focused business and we're successfully executing on our plan. The RLG Coffee is just the first example of this execution. We have a simplified business model. We've sharpened our cost base. We've secured multi-year supply contracts. So we're still a small cap company. We've got a market cap of 7 or 8 million with a $64 million coffee contract and requests for $110 million of health and wellness products, from one sales channel alone. So, our plan is to keep delivering as we've started. And we believe that 2026 can be a year where that work becomes very visible in our numbers and ultimately in delivering shareholder value.
Fantastic. No, that's great, Bryan. Thank you again for sharing. We'll be watching with interest and hoping to see some more success from you as we lead into the new year. Thanks for watching, everyone. This is smallcaps.com.au, and until next time.